Good morning, everybody, and welcome to the Dynamics Care webinar series. Today we're going to go through the best practices for payables management. And my name is Chris Siley, and I'm a principal consultant with IBIS. Probably worked with some of you all, so probably won't recognize my voice. Let's go ahead and get started. So the topics we're going to be covering today, just kind of picked out kind of some main ones and some pointers that I kind of see a lot of customers doing that I would consider to be some of the more better practices with GP as far as payables is concerned. First, I'm going to talk about keeping your vendor IDs consistent, kind of go into why you would want to do that, how to accomplish that, and then just some quick examples of what I mean by vendor IDs. The next thing I want to talk about is how to effectively use your user-defined fields. Go into some examples of that, show you how you can use those payable systems. Then talk about utilizing vendor classes a little bit. Also utilizing recurring batches. I'll go through some reports that you can use to prepare for doing your check runs. There's some real helpful reports to help you either identify which vendors you want to pay or documents you want to pay off, and then also maybe see if there's some areas where you can apply some documents beforehand so that you're able to apply rather than letting the system apply them for you. And then finally, I'll just kind of touch on reconciling your payables to your GL. So the first topic is the vendor ID consistency. So why do we want to do that? Well, there's a couple main reasons that I feel that that's a good thing to do in your system and can really practice. One is for sorting purposes. If you come up with a good naming convention for your vendor IDs, you'll be able to sort them on reports and smart lists, things like that, and also helps you with looking up those vendors when you're in your lookup windows. Second, a reason why would be you could avoid duplicates. So it can help you avoid duplicates in that if you're looking for, in the sample company, a travel company, and it's already there, and you pull it up and you can't find it, you can run the risk of keying it in again. I've seen this at a lot of customers. They're not able to quickly find a vendor. They'll create another one, and you can end up with the same vendor a couple times in the system. So by keeping a vendor ID consistency, a good naming convention, that will kind of help you avoid making those duplicate vendor records. So how would we do that? So first would be to come up with it, and second would be to stick to it. And there's a couple different ways that I've seen customers accomplish this. You can use, obviously you can have a process put in place that forces you to do it as part of your process. You can utilize the vendor note field on the vendor maintenance window. I'll go in and show you that to you in a second of where you could use that note field to kind of show instructions on how you want vendors to be set up, what the naming convention is. So people that are new to the organization can pull up that note and see exactly how they should be numbering or naming the vendors. And a couple examples would be numeric. And I've got here that's one that we see people use sometimes. Is just a pick a length, maybe an 8-digit number, and you just increment it. The one problem with that is it can be kind of hard to manage. Because the system doesn't automatically number vendor IDs for you, you would basically have to have some way to know which your next number is. That could be something as simple as a smart list that pulls all your vendor IDs and sorts them descending so that you could just open up your smart list to find out what the next number needs to be. But that, again, that can sometimes be hard to manage, and it's also not very meaningful to just have a number that goes up. Another option I've seen that's a lot more common is some type of combination of the vendor's name with a numeric number. And that might be you take the, say, first 3 digits of a vendor's name, and then you add on maybe a 3 or 4 digit number. So you're just kind of incrementing in case a vendor's name does have the first 3 letters, you now have that numeric value after it to show that that is indeed another vendor. It could be, you know, the entire vendor name and then a number, some type of consistency with the IDs. Let me go in and show you an example of how to utilize the card. So if I go into my vendor card here, many of you are probably familiar with using notes on records in GP. So you'll notice there's a note on the vendor ID field. There's note fields. Most of you are probably familiar with those. They do get used a lot. One common overlooked note is the Windows note. You'll find that at the bottom of most windows in the system will be a Windows note. And what that Windows note does is allow me to attach a note to the vendor maintenance window or whatever window I'm on. So it doesn't really stay with the vendor record itself. It's a Windows level. So a good example of how to maintain that type of consistency here is I could put a vendor naming convention, and I could have first 3 of company name, and then 4-digit counter. So I could say something like, down a little bit. So this one's Ace Travel, so this one might be Ace and then 0001. Just so that somebody has an example of what we're, or an organization of what we want our naming convention to be on our vendors. And now you'll notice that that note, just similar to record notes, now has writing on it so that I know that it's there's a note on it. And I can pop that up and I can see that that's our naming convention. So if I'm ready to create a new vendor, this is the convention that I need to use to create that vendor. Obviously, it does require, you know, a process because your employees would need to know they need to check the notes. If they're new, they need to know they need to check the note for that naming convention. You could write some type of customization or something to have that auto pop up that would work in your organization. That's just a simple way to kind of show how you can document in the system what you want that naming convention to be, and then just have a process in place to review that. Back over to our slide deck. So the next topic I wanted to talk about is utilizing your user-defined fields. So user-defined fields can be used to further define some type of vendor grouping. It could be the type of vendor it is. It could be, you know, what the vendor is used for. Any type of additional kind of breakdown that you want as a vendor that maybe you don't want to use as a vendor class, which I'll talk about here shortly. But maybe you don't want to set up a vendor class for this. You want to be able to group vendors within a class. So this would be a good area that you could do that is with the user-defined fields. You can rename the user-defined fields for any of those of you that don't use them or have seen them on the vendor maintenance window. Just called user-defined 1 and user-defined 2. You can rename those, so I'll show you where you can do that. And then the user-defined 1 field is a field that can be used on most of the reports in the system as a restriction. So when I go in to run, say, an age trial balance, and I have to select my restrictions, I can actually restrict that report to be done by that user-defined 1 field. User-defined 2 cannot be used on the reports, but you can use it as a filter in your smart list. All right, so to name the user-defined fields, when you go into your Payables setup window, and you click on your Options tab, it'll bring up the Payables Setup Options window. Most of the other things on here you're really not going to change except for maybe your next voucher number, next payment number. But you'll see there that the user-defined one field we've changed to type. So in my system, I want to be able to define my vendors based on the type of vendor, but I don't want to necessarily have a class per type. And I'm not going to do anything with user-defined 2 at this point. So then when I want to go use these user-defined fields, on the vendor maintenance options window, so when you're in your vendor card and you click your options button, and you get all these additional fields or options for your vendors, you'll notice over here on the right is now the type field. So it no longer says user-defined 1, now what I named it. And you'll see that for Ace Travel, we've defined that as an other expenses vendor. So an example of where I could use that is if I go into, again, run my historical Ace trial balance, you'll see that now I have type is a range that I can use. So it doesn't say user-defined 1 anymore because I've renamed it, and you'll see in the from and the to, I just said I want it for my other expenses vendors. So that's down in my restriction box. And when I print my trial balance, you'll see up at the top right-hand side where it has by type, it says other expenses to other expenses. So this is going to be all of my vendors where the type field is set to other expenses. The one thing to be careful with using those fields for the grouping is you want to keep your groupings kind of simple because it is a freehand field. It's not a lookup. So if somebody types in other expenses correctly and somebody types in other expenses but spells expenses wrong, you're going to leave out that vendor if you do the restriction on other expenses. So when you use that field, you do have to be careful. And you would want to try to keep it simple of what you're putting in that field to make sure you don't miss records when you're using that field as a restriction. The next topic that I want to talk about is utilizing vendor classes. So vendor classes, like classes in some of the other modules, they're optional. You don't need to use them, but they do add quite a good benefit by using them. And I have a couple of those here. One is it's going to speed up new vendor creation. So if I have a class set up for maybe my 1099 vendors or employees, if I'm going to be doing employee expenses, I can set up a class for that, and I can set up a lot of defaults on that class. What their payment terms are, what their 1099 flag is, GL account that I want to be used on that vendor for any vendor I add to that class. You can set all those options up ahead of time as a class, and then as you're creating a new vendor, you just select that class, and it's going to grab all those default options from the class for you, so you don't have to go in and set them up every time on every vendor that you create. That's a good benefit to using the classes. Another is if you need to make a massive change to a group of vendors all at one time. So again, maybe my employee, I have an employee class, and I have to change a GL account for those. And let's say I have 3,000 employees. I don't want to go to 3,000 vendor records and change an account number. That's a big waste of time. So by having a vendor class for my employees, I could go to the class, I could change the account number, and then it would ask me if I want to roll those down to all those vendors, and just by simply clicking yes, it'll go in and update all 3,000 of my employee records for me and fix that account number. Another big win for using the classes is grouping the vendors for reports. So just like we can do with our user-defined one field, we can also do it by class. So this is going to kind of give you where you can have two layers of groupings. So if you say, I want to run a report on my corporate vendor class, but then within that class, I only want to see, say, other expense vendors. So by using those two fields, the user-defined one and the class, in conjunction with each other, you can really get some good grouping on reports for you to use. And the last one I got up here is selecting vendors that pay during a check run. So one of the restrictions that you have when you build a check batch is that you can select your vendors by class. So if you go back to the example of having an employee class, you're going to be cutting expense checks out of GP, again, for 3,000 employees. By having a class in there, it's going to make it really quick for you to build a check batch on your employee class. You just select that class, and it would grab all those vendors to create in your check batch. So it definitely gives you some added benefits in the system. So for any of those of you that have not set up vendor classes, it's pretty easy. Under your tools setup, there's a vendor class setup window, which I have on the left, to where you'll see that you would name your class, give it a description, and then you've got all those fields. And they're all optional. So if you start using classes, or if you're currently using classes, you don't have to populate every single one of the fields on here. Again, it's just going to be used to create those defaults for new vendors. So the more information you put on these classes, the more you're not going to have to key in on a vendor. But if you have fields that are going to change or potentially change, depending on the vendor significantly, then maybe you don't populate that field. So if you're not sure on what your payment terms may be for a corporate vendor class, well, then maybe you don't default payment terms. Maybe you just assign that after you create the vendor. On the right-hand side is the accounts. So again, I can define all of these account numbers at the class level, and then anytime I assign a vendor to that class, those are the accounts that are going to get assigned. Again, it's just going to be defaults. You don't need to populate every single account. You can populate as many as you feel necessary, or that will not change for any vendor that you add to that class. All right, the next topic I wanted to talk about is utilizing recurring batches. Again, this is typically a feature that gets a little overlooked in some of the other modules. It gets used quite a bit in the GL, but there are some good uses for it in the other modules as well. An example of using it in the AP would be to use it for bills that are going to remain constant over some certain period of time. You can do multiple frequencies. Two of the more commonly used ones in AP would be a monthly or a quarterly. It might be it's a monthly rent check that you need to pay. You set that up as a monthly recurring batch. It might be some bill that you need to pay quarterly that you're going to set up as a recurring batch. But there is also weekly, semi-annually, semi-monthly, bi-weekly. There's a miscellaneous one where you can define how many days between each interval that the documents in that batch need to recur. And they're easy to set up and maintain, so there's really not a reason not to use them, aside from people just not knowing that it's there. And again, I have my example there of rent checks that are due monthly. So to set up a recurring batch, you're basically going to use your same batch entry window you do for every other payables batch. The only thing that you're going to change is the frequency field. And that's just a simple drop-down that allows you to select one of the frequencies, whether it's monthly, quarterly, bi-weekly. By selecting a frequency, it's going to then open up your recurring posting field and allow you to type in how many times you want this batch to recur before it goes away. So I've defined that this is a monthly one that I want to recur 12 times. So after I post this batch 12 times, then it will disappear just like a single-use batch. The days to increment field will only be available if you select a miscellaneous frequency, and that is because the system does not know how many days to increment between the postings if you don't tell it. The only one it knows is the monthly, the biweekly, the predefined ones in the drop-down. It knows how long to increment. So to basically use it, you would put any transaction that you want to recur, you would put into this recurring batch, and then once you post it, it'll just stay out there until the next time you go post it. It does keep track of the last time that it's been posted. You'll see the last date posted field, and you'll also see a times posted. So that'll start counting up. Each time I post it, it'll count up till it gets to 12, and then it'll go away. The system doesn't automatically repost your recurring batches. You do have to go in and post them. It's just a way to keep the batch out there so you don't have to recreate those invoices, and it'll increment the transaction dates every time you post it. So for this month, this one's dated 4/12. I could go ahead and post it. It would post that batch. It would post the transaction for 4/12, and then the next transaction inside the document will have advanced to May 12th of 2017. So it's just going to increment based on the incrementing factor and stay there for you to post the next month. All right, the next topic is the PreCheck Run Reporting that is available. So there's two great reports to run prior to building a check batch. Most of you probably already run an age trial balance of some sort. I listed historical age just because that one to me gives me the best information because I can do a point in time with that one. But any of the other trial balances would have the same effect for our purpose here. And the second is a cash requirements report. And it's a report that often gets overlooked. A lot of people either don't know it's there or shown it in training and never look at it again. But it is a very good report to kind of see, based on a payment date that you're putting in, what documents are out there and how old they are to help you identify what you want to pay. Obviously, if you're in an organization that pays every bill, every check run, I've worked with companies that they do check runs every 2 weeks and they pay off everything. These reports really aren't going to help you very much in this sense because you're just paying everything off. But for those organizations that carry AP, they can be very helpful. So both of those are going to help you identify what you should pay, and they can also be used to identify open credits that may need to be applied. So the first one is the cash requirement report. And I've got the path to get to it in here since many people, like I said, either don't know it's there or haven't seen it since their training. But it basically is going to pull up a report. It's going to give you your voucher number, the document amount, how much has been applied to it already, and then any valid discount that you might have, the discount that you are risking losing or that you've lost. And then there's a field on there called days old. So it's going to tell you how old those documents are. It's a good way to kind of see what's been out there for a while that might jump out and say, oh, maybe I need to go make sure I include this in my check run. Even if it doesn't get selected for payment, I need to include this because it's 120 days old. That's what that report is going to be used for. Your second one is pretty much everybody is probably familiar with what your historical age trial balance looks like. But what you're really looking for on this report, again, is things that are kind of outstanding. So this one's going to show you your buckets. This one isn't going to really tell you how old something is, but it is going to show you where that invoice is in the aging buckets. So you can visually see this one's been out 60 to 90 days. This was still current. Maybe I don't need to pay this particular invoice when I do my check run and I select the vendor. Maybe I can go in and unselect these invoices because they're not, they're still current. And then the other thing you can use this for is to be able to identify any open credits or payment documents. So it may be that you put in a prepayment for a vendor and you didn't have an invoice in there to apply it to. So it's just been sitting out there on the vendor's balance, or a credit memo you might have sitting out there that's unapplied. What GP will do when you do your check run by default is apply any unapplied documents based on a setting in your setup, and that's either going to be by document date or by due date. So it's just going to take any open credits, go back in time and find either the earliest document or the earliest due, and it's going to automatically apply that. So it may not get applied to an invoice you want it applied against, or your vendor does, wants payment on that one, not a credit applied. So there can be a multitude of reasons why you don't want it auto-applied. Your other option during the check run is to not auto-apply them, but if you don't auto-apply them, then you run the risk of paying for it and continually carrying that open credit, which may be fine if you've been told to carry it. So your other option is to ahead of time look at the report, identify those, and if you know that you have some documents that you need to apply, you can go ahead before you build your check run, get those document numbers, go in and apply them, and then do your check run, and that way nothing will get applied against documents you don't want it to, and you won't check to not apply automatically, and then run the risk of paying documents anyway. So there's kind of a dual use for this report in that sense. The last topic that I have is reconciling your payables to your GL. This is one thing that all of you need to do is do a reconciliation. There is a great tool that's been in GP since version 10, which is the Reconcile to GL tool that's going to allow you to generate a spreadsheet in Excel and compare what has hit your AP subledger versus what has hit your general ledger, and try to do some automatic matching for you to help you limit how much looking around you need to do to find discrepancies between the two as you do your month-end reconciliation. A good tip for trying to make that process as easy as possible is to try to limit the use of your AP accounts to just one. I know there's a lot of companies that sometimes try to keep more than one AP account. The fact of the matter is that GP only keeps one subledger. So when you pull up your historical age trial balance, that's your subledger. So to try to have multiple AP accounts feeding one subledger can just kind of cause problems trying to make sure those reconcile at month end. You need to make sure that when you're reconciling, you grab all those AP accounts to try to match it up to the subledger. And if it doesn't match, then it's kind of hard to track down which AP account is my problem in. Is it in my 102,000 or is it in my 202,000? So it can kind of make it difficult. So where you can, try to keep the use to a single account. Not to say you can't reconcile it. It's just going to be a little more time consuming to track down any discrepancies. And then make sure you've posted everything for the month before you start to try to reconcile. That actually happens quite a lot where somebody will get something in at the last minute, it won't get posted. Somebody's already started trying to do the reconciliation and they're coming up off, and they don't even think to go look to see if everything's posted. They just assume everything is posted for the month. So one of the first things, if I'm doing a reconciliation and I'm out of balance, that's almost always the first thing I will go check, is to make sure that all the transactions for the month I'm trying to reconcile have indeed been posted. So to use the tool, for anybody who has not used the Reconcile to GL tool, I have the path to get to that, and it's just a little window that has a drop down for the module you want to reconcile. This does it for AP and for AR. So you just select your module. You put in your date ranges that you want the transaction to pull for, and then on the right-hand side is where you list all your accounts. So again, if you have multiple AP accounts, you would need to make sure you include all of them in that list of accounts for it to work properly. And once you've got all those in there and you click Process, it'll generate a spreadsheet that looks similar to this. On the left-hand side will be all your payables transactions for the period that you selected. And on the right-hand side will be all of your general ledger transactions. And you'll notice at the top and at the bottom of both sides, you're going to get a beginning balance and an ending balance for both sides. And in the middle of the sheet is basically going to group your transactions. So you've got any unmatched transactions will be at the top. So that can quickly help you identify maybe journal entries that you did straight in the GL with a journal entry to your AP account. You're going to find a transaction there because there's not going to be any corresponding transaction in the payables subledger. So you'd have an unmatched transaction. So that's kind of your first big area to look to see if something got posted in one side and not the other, is unmatched. The potentially matched transactions section is going to give you, this is what the system thinks are matching transactions, but it doesn't know for sure. In most cases, if they're potentially matched, they are matched. But if you're off, that is the second spot you want to kind of go look and verify that those indeed are matching transactions. And then the last section is the ones that do get matched. So those are all the ones you really shouldn't need to worry about. Those are the ones that the system has found are matching transactions from the subledger to the GL. And then on the bottom left, you'll get what your difference is. You get your beginning of both ledgers, your total ending from both, and then what the difference is. So once you get down to 0, you reconcile. Again, it's a really good spot to start with doing the reconciliation because some stuff is just going to jump out to you instead of having to print a trial balance out of GL and a page trial balance out of AP and sit there and tick and tie. That's what this tool does for you, is a lot of that ticking and tying to help you at least be able to drill into where you might need to tick and tie so that you're not tick and tying every transaction. Right, so that is all the presentation I have. I'm going to go ahead and unmute the line and take any questions.
Oh, yes. We have several GL payable accounts along with currency differences.
Okay.
How will this affect when we do the reconcile here with at the end of the month?
Yeah, so the reconciliation at the month is going to be just always in your functional currency.
Okay.
And then you got, obviously, to go through, you've got additional steps as far as multi-currency goes to, probably do some revaluation and stuff. But the reconciliation from your GL to your subledger would be done in your functional currency.
Okay. But you're saying there'll be additional. We haven't set it up. We haven't activated it yet. So I'm not really familiar how to do this yet.
Okay. Yeah, it's all done in functional.
Okay.
You can run your GL trial balance in your AP and get multi-currency info, and you could do a reconciliation with your multi-currency information reports. But the tool is not going to do that. The tool is strictly going to do it with the functional.
Okay, that's fine. That's pretty much what I'm doing now. I'm doing functional. Okay. All right. So there's no concern really outside of that.
Oh.
Very good. Very good. Thank you.
You're welcome. Any other questions? All right, well, I want to thank everybody for participating today, and if you do have further questions, you can always email info@ibis.com. Again, thank you, and everybody have a great day.
Thank you, Chris.
You.
Thank you.